Yo, what up? My bad, y'all, just getting on real quick. Let's see. Yeah, I appreciate you guys for watching though. Appreciate it. If you guys wouldn't mind hitting that like and subscribe, hit that like and subscribe. That really helped me out. Appreciate it. Alright, so let's see. I appreciate you guys also for, if you guys are watching this channel also, make sure you guys subscribe to that channel. Alright, so what I kind of see right here is, yo James, what's up bro? Let's get it. Been waiting for that live notification all morning. Yeah, no, today and tomorrow it's gonna be pretty late. I've been I had to work today, so I'm busy at work all during the day, so right now is the only time I could get on for stream. But today and tomorrow is gonna be on that. But then the next day, the next 2 days though, I'm gonna actually be off of work, so I'm gonna be streaming New York session and possibly Asian session in the next 2 days after. So make sure you definitely be on the lookout for that. Definitely, bro. But yeah, I appreciate it, James. Appreciate it. It's looking like we're kind of in a ranging mode right now. You can kind of see we just been stuck in this little 30-40 pip range right here from 26 up to 32, which is about 50-55 pip range. So you know, and it's only 55 if you get in here and get out at the very top. So I mean, it's even smaller if you get in later and get out sooner, you know. So yeah, that's kind of what I kind of see right now. It is definitely still staying, it's just ranging right here in this little area right here. So I don't think it's going to do much. I think it's just gonna stay ranging. Let's see tomorrow. Let's see if there's any kind of action tomorrow for CPI, or is there CPI with that one? No, that's for that Tuesday. So we're gonna be looking for Wednesday. So Wednesday, do we have anything? We have a bank holiday for Wednesday. What? Bank holiday? All day. What does that mean? Bank holiday. What the heck? Let's see. Bank holiday. Oh, it's Juneteenth, I guess. Yeah, alright, so let's see. So maybe that's why we're ranging. Alright, but yeah, Juneteenth holiday, but yeah. Are there any fair? I still struggle in marking up my fair. Hey James, you can definitely, there's this if you go to indicators, and then you look up this one right here, the second one, FVG, Nephew Sam, that's the one that I use when I do use it. It gives me all of them right here, and it'll just tell you exactly where they're at, so that way you could just see, you know, this is a bullish one, green, and then the red one is bearish. Yeah, but yeah, like I said, that little this right here will just help you out until you get more familiar with it. And it's also just, obviously when you get better at it, you'll be able to see it, but it's always good just to have the visual, because it takes less brain power to really see it, you know, because you could already see it. You don't have to be looking for it. So just it showing you there kind of is pretty good. I like that. So let's see real quick. Boom, boom. But yeah, we are just ranging right now, so that's kind of what I'm worrying about. Yeah, for sure, bro. Just save that indicator. Yo, let's go. Good job, man. Like I said, man, life. There's a lot of things that we could do to make life a little bit easier. So why not do it? You know, makes it a lot easier. Do you usually mark up your fair value guys on lower time frames or higher time frames? That's the thing, is that I'm not like they said. This is my way of thinking about fair value gaps, because I've seen things that they say fair value gaps aren't that useful, and then I've seen things that fair value gaps are. So from what I've came across, just from my own kind of gathering of data information, is that fair value gaps are only valid and they only work if you're in the correct direction of the market. So for instance, what I'm kind of saying is that if you have, like, let's say right here, this side right here, you're bearish, right? Because this is red. So there's a fair value gap right here, there's a fair value gap right here. And the idea of fair value gaps would be, if this is a bearish fair value gap, then every time you come to it, you should reject. You know what I mean? So what I'm pretty much trying to say is, when you're bearish and then you do run into these fair value gaps on a bearish area, you will reject. But that's only if you're on the correct direction of it. Let's say you're seeing these and you're like, but you're overall bullish though. If you kind of zoom out a little bit, you could kind of see that we're actually kind of bullish on this level. So let's say that none of these get respected or something. Like, let's just say you start closing above them and then you start doing this and you start going back up again. What that would tell me though is just that those fair value gaps weren't really respected. So it really does depend on, though, from what I've seen though, like I said, if you're, this is what I've seen myself also, is that, like, let's say we're on a bullish area, like going upwards, something like that, you know, we're taking a trade up. All of these fair value gaps right here, boom, you could take it to go up. Fair value gap right here, boom, you could take it to go up. So if you were in the correct direction, then yeah, every time you ran into these fair value gaps, it was in your favor. But let's just say, like how I'm saying is, we're taking bullish buys, but let's say at some point you wanted to take a sell. It's just like, that's kind of what I'm saying though. It's just pretty much, it needs to be in the correct order flow also. You know what I mean? So fair value gaps aren't the like answer, the ending goal, or like the answer to all your problems in trading. It's just another tool that could help you, you know, gather more information and stuff like that. I heard a guy say fair value gaps are like mid-level liquidity zone areas to be tapped in order to clear more buy sell orders. Yeah, no, yeah, and it's kind of like just understanding like how, like, what does it mean when you see these candles, and like kind of what I've learned and stuff like that. You see how this candle is right here, right? And then you have this candle coming down, and then you have this candle coming down. which creates this fair value gap right here. So what this fair value gap pretty much is, it's pretty much right here, this fair value gap. This is pretty much an area of more sell orders than buy orders, because of the fact that it's just all bearish momentum. Same thing if you were bullish. If you're bullish on this side and it had a fair value gap, there's more buys in that area than there is sells. So pretty much what you are saying by like areas need to be tapped in order to clear more buys and stuff like that. Yes, that is true, because in order for this, like because there's so many sell orders in this direction, in this area, that when we do come back into these areas, we're pretty much stopping out all of these orders. Like anybody who have stop losses right here, stop losses anywhere in these areas, they're just getting stopped out by us coming back into these areas. So like, I guess they call them kind of like imbalances, I guess. So what the imbalance is pretty much is that there's so much imbalance of selling pressure, we have to kind of balance it out with buying pressure. And then that's what these buys, because like I said, if you kind of look at this chart right here, what it kind of makes you think is that, oh man, we're going down, you know, this is a very bearish, yeah, oh, we're going down, closes below, you know, we could definitely come down. But then, you know, then it ends up turning around, coming back, tapping these areas. So what I do and stuff like this is, what I do is, let's say I have a target. Let's say I'm taking a sell or something. Like what I kind of would use a fair value gap for is understanding that, like how we're talking about these imbalances or whatever they call it, is that when you're in these sells in these areas right here, there's a good chance that we need to come back into those areas. So understanding that if you have, you know, these fair value gaps up here, there's a good chance that we need to go back to those levels. So what that kind of tells me though is that, like, let's say I'm taking a sell, where I would find my targets at is usually probably a fair value gap, because how I'm saying is that these fair value gaps are one side of the orders. You know, like let's say we're coming down right here, all of this area right here is all sell orders. So when we end up going back on the buy side of it, it's just clearing out all of them orders. So that's why I was saying is that, like, when you when I'm looking for targets, like let's say I did take a sell here and I'm like, where should I keep my targets? Obviously like the bottoms of ranges and stuff, but look at where the bottom of this range is. It's also at the start of a fair value gap. So this is why it's important too to collect data on what you're using fair value gaps for. I've used fair value gaps just pretty much the understanding that this is a candle right here that stopped, and then there's a candle right here that stopped. So there pretty much tells me there's a resistance there and then there's a support there. So kind of what that tells me though is that if I were to take a trade, I should be looking at these like fair value gaps and things like that as like a support or resistance. But this is why I say it's important that you have to collect your data, because you need to see how far or how deep into these fair value gaps it goes. So like I said, look, there's a line here for the bottom of the fair value gap, there's a line here for the top. So what I would do is gather information. How high do we go? Do we go here to come down, or do we go here to come down? And when you start gathering a lot of information, you'll start to know what targets you should start looking for. Should you be going for the top one? Should you be going for the bottom one? Things like that. So you just, like I said, every time you're looking for something, you have to find what repeats itself and just keep doing that. Fair value gaps, just possible reaction point after liquidity sweep. Wherever it is, take the first 15 or 5 minutes after the sweep of liquidity, and there's your trade. Damn, Vlasic, good looking, appreciate it. So for the current two fair value, there's a higher chance price will reject at either of those. Yeah, James, exactly. That's kind of my understanding. Because we are bearish at this point, where would you most likely have some kind of reaction that you're gonna have a reaction either at the bottom of that fair value gap or the top of it, or the bottom of this one or the top of that one. But then that's why I say like things like this for right now, for that question that you have about your fair value gaps and what you're targeting, you should understand like where is this gonna get a reaction at? Is it gonna be the bottom of it, or is it gonna be the top of it, or is it gonna be the middle, or is it gonna be, like I said, this first one, or is it gonna be this top one? So it's just like I say, you just need a lot of repetitions to gather the wait for closure and depends. Bit me some trade, the lower time frame. I'm more of a higher time. Just depends on how you see the market. My boy, I can't read it a lot. Yeah. I wanna show you too. Look at these areas right here. This is how I was kind of able to find these areas as a target. And this is kind of a thing that's kind of giving me an idea that we might need to come down here, or if come down here. And Elastic, this is what I was telling you about the other day or earlier today. I'm gonna redo these lines. So it's kind of like this is every stream is an eye opener, bro. Taking notes like a madman. Yeah, let's go. Good. That's what's up, James. It's just a lot of reps. That's the thing too. Is like I say, is like a lot of the things that I come up with is because like I'm taking like a notes in the back of my head. Cause like let's just say for instance, it closes above here. What happens after? You know, things like that. So that's one note. And then you just keep taking notes of everything that you see repeating. Fluidity, no trades yet. We're kind of stuck in a range right here. Like look at the last three candles of the 4 hour have just been back and forth in between these areas right here. So what I'm kind of waiting for, we probably are just gonna range this session, to be honest. That's the one, bro. Keep going every day grind. Give us a trade breakdown for your 100 pip trade would be good, bro. Oh yeah. Look at down here. This was the area right here. Where was it at? Was it down here? I think it was down here. Or no, was it that one? Oh no, my bad. It was down here. Yeah, I'm gonna show you exactly how I found it, Elastic. But look at Elastic, this is also what I want to show you right here. Look, this is the idea of that like stuff I was sending. The stuff I sent you earlier. So obviously you know about ranges and stuff like this, right? This is the range, right? But now if I go to a weekly time frame, look at all of that is just this one candle pretty much. So this candle pretty much makes up all of this range right there. So pretty much it's the same thing on every candle. So now on the 4 hour, look at right here, the 4 hour, boom, boom. This would be the range. And if I go to like, let's say the 5 minute now, it's the same thing about that. So look at, boom, we came to the top of it. So what might need to happen is we might need to come down to the halfway mark, if not all the way down to the bottom before going back up. So it's just the same thing just happening over and over. But I'm gonna show you how I got that trade. Look at this, was the idea right here. Teach me, master, I'm listening intently. Yes sir. But yeah, so like understand that like how I'm saying is the candles are ranges, right? So that pretty much means that this candle right here is a range. So you're going to hit the top of the range, and then you're going to need to come back down to the bottom of the range. And it's the same thing. You go to the daily, same thing on the daily, same thing. Boom, boom, look. This ends up becoming the range. The candle right here, boom, boom. So now we might need to touch the top before coming back to the bottom. So it happens like this every single time, right? So look. This is what I figured out right here. Like this is the idea. I was watching this ICT video and the breakdown was simple, but the way you explain it makes sense to me. Yeah, man, he knows his stuff, bro. I'm trying to cook one day like ICT, be able to read prices just like that. But yeah, look at, okay. almost to like this. Look, this candle and this candle become the range, because you could kind of see like they're just the one color. So this becomes the range right here, and it's just like, and then it goes from that range, and then it closes below, does all that stuff. And that's how I'm gonna show you how I found the target, right? So look, this is how I found this target. Let me see, Monday, Tuesday, Friday, right here. That's the daily. This is the 4 hour right here. This is it right here. All right, look. Okay, look. I'm gonna do the replay right here. So the replay, so you could kind of see. Select bar right here. Okay, look. Okay, look. This is the idea right here. Okay, look. This is the idea right here. So the idea is always like this too, like that picture that I sent you earlier, right? Is that you're gonna have a candle like this, and you're gonna have it with the top wick and bottom wick. Then you're going to have this then you're gonna have another candle, which is it's going to make a longer top wick, and then it's going to close inside of the first candle, which is the range of this first candle. So as you can see, it wicked up, and then it closed back inside of this first candle range right here. So that means that's the range right there. So this is where the and this line right here is the target. So this is that area of what we call like the turtle soup right here. So this right here would be the previous high or low that you're targeting, and that would be your turtle soup area right when it goes up and then comes back down. And then you would take it back to the opposing range, which would be the opposite range of that. So when it closes above, the wick above right here is the turtle soup pretty much. So it breaks those lows, comes back down, comes back in the range. And then that's when then the next candle, a lot of times what happens is it wicks back up to the previous candle, which is right here. It wicks back up to here, and then it goes back down to the bottom of the to the range. And then it usually breaks this range. Like I'm saying, is it usually breaks this range, which is the bottom. And then this right here targets the next previous low, which is over here, something like this. Let's say this is a low over here. It targets this low. And then when this low gets targeted, it's the previous low. So when this, like I said, look at this is the idea. It needs to come up first, touch the top, then it comes back down to the opposing range, and then it does all of this, and then it starts to do this, and then the next candle closes like this, after the previous candle like this, and then this candle right here becomes the turtle soup, and then that's the one that does the exact same thing that I was telling you about. Boom. And then it does where the body, it wicks down first, and then it closes back inside of the range, and then this candle ends up becoming the range again, and then it needs to go back to the top of this area, and then that's when it does the same thing. So that's where I say though, is it literally goes from right here into the turtle soup, back down to the target. You find the target, then it goes back into another turtle soup, and it goes back out. So it's literally just going from range to range over and over and over. So like I said, I'm going to show you exactly how I found that target, and this is how I'm able to find the same thing over and over and over and find it again. Is right here. Watch, look. Okay, look. I think it was which one is it? Okay, like this, pretty much kind of like this idea right here. Okay, look, this candle, and then this red one, it actually closes it actually wicks above it. So it does do that. right? So look, you could see it. It does it, barely does it though, but it does it just enough. Like I said, you don't need to do it a lot. It just needs to wick above it, boom. Then it closes inside of this as the range. So this candle's the range now. So what ends up happening, I see good strat for gold always has a tendency of coming for highs and lows. Nice, bro. Yeah, and look, I'm gonna show you right now. I'm gonna show you exactly how that happens. So look, this is the same idea, and this is where, look, this is a high, boom, we came back down over here, created a low, and it does the same thing. Look, if you look right here, left, boom, same thing. It just happens from, look at right here, it goes into this one, boom, does it, and then it goes into this one, boom. And those are just the turtle soups, pretty much the idea. But yeah, look, let me explain how I get to this point right here. So this was the idea. So when this candle wicks above and it does that, and then it closes inside of this candle, creating the range. Now this is the range. We need to come back down to the bottom of this first candle right here. So this is what I figured out, is that we need to close below this range right here. So this candle becomes the range, which is this first candle. It becomes the range. We need to close below it, and then we need to target the previous low. So when I go right here, look, I'm gonna go down to the 1 hour. The previous low looks like it's going to be maybe either here, here, or here, but it's going to depend where that candle closes at. So if the candle closes like this, then this is the previous low. But if this candle ends up closing like this, then this is the previous low. If it closes underneath it, then this is the previous low. So it's pretty much wherever the candle ends up closing. So like I was saying though, is that we're gonna get right here back to this 4 hour, and then look, we're gonna just play it, let it play out for a second. Okay, boom. There's the candle that ends up closing, right? So look, right here, close below. Close below, and then this is where we landed at, boom, right there, right? So the previous low is going to be wherever before that candle right there, which it looks like it's going to be right here. So let's move this down to this previous low, boom, that's the previous low right there. So what I'm going to wait for is a closure below this, and then that's where the wick is going to do that candle formation that I'm talking about, where you're gonna have a body close below, then the next candle is going to wick below this candle, is gonna wick below, and then the body is gonna close inside of this candle range right here. So it's going to close inside of it, and then the next one is pretty much just going to start targeting the highs of there. And then that was the actual move though, because on a higher time frame, that was the target, like possibly on the daily or the 4 hour. So like, let me just wait for this to happen. Let's go to the 15. So what I'm going to do now is wait for a candle to close below this range, just like I was explaining it. And this is where I'm saying though, is that this is what we're able to repeat over and over. See, look, a lot of people would have probably fell for this and maybe thought this was the area, or was it there? Well, we're gonna find out right now. I mean, it's looking exactly like the area, because if I would have did that, it did the same thing. Nope, that's not it. I'm just going off of just from that. I'm just gonna go off of that. So let's see. Right here. Here he comes. Okay, it's moving its way down. It's moving its way down. Okay, look. Boom. Let's see. 5 minute. We need a closure below. A closure below. Boom. Okay, there it goes right there. And then I believe this would be your entry area of where we would have wanted to take that trade at, the one that we were talking about. Why? Like I was saying, it's the way the way those candles. So you would take a buy right here, And then that's when I believe this is the area that ends up turning around. And then look, and this is where I was saying right here. I mean, I don't need this. I already know it's gonna do what it's gonna do. Like I was saying, look at this candle right here. Yeah, I wish I could get rid of this. So look, you can see this candle right here. Look, this is the candle, and then look, the wick below. We wick below, and then we close back inside of the range of this first candle. So we close back inside of the range. So now look at, like I said, look at now what did we end up having to do? We had to end up targeting this high. But this is what's happening on a higher time frame. If I went to the 4 hour, 8 hour or something, or daily, this same thing is happening where this the range of the candles, and then that's where that was the entry right there that we were able to find to get into that trade that we were talking about. And if I was correct, yeah, look. And look, I'm gonna show you, this is the Andrew entry that we talk about last hit. There it is. Yeah, look right here. Look, this was the Andrew. Now this was the fair value gap that got created by this. And then what we're gonna do is wait for a red candle to form, and then we're gonna target the order block, and then that would be the order block, I believe. Cause look at right here actually. See, look, this candle right here becomes the order block. So let's move this to the top of there, and then once it comes back down and it taps there, that would be our second entry, or aka Andrew entry. Let's see. Okay. Oh, almost. Oh, look, that was it right there. Okay, that would have been the entry right there. We would have had to hit that one. That would have been the entry right there. And if I go to a 1 minute, I believe this is the order block right here of this 1 minute, which is, yeah, kind of like this right here, this area right here. This order block pretty much is that was that area right here. But yeah, that's pretty much the trade idea right there that we were trying to yep, after the liquidity suit. Yep, there it is. Yeah, the key is finding the liquidity in the highs and lows and the fair value as order blocks within the kill zone time. Nice, bro. Could you break down? Thanks for that one, bro. Yeah, for sure, bro. Hell yeah. And like I said, bro, but that's where I was saying though, is that look, this is on the 5 minute, right? And obviously we know how it ended up playing out. Like, look, this is where we ended up taking the buys at down here because of that same idea. Close below, and then wick below, and then a raise above, and that was it. And look, that was the whole trade right there, and that was the idea. How do you identify order blocks, or is this just the same as fair value? Order, the way I do it is I pretty much just go to the top of the range. Let me get out of this now. All right, so what I pretty much do is I just go to the top of the range, and then I just find the first, like if you're going down, you're gonna get the last bullish one, the one that created the resistance before the move down. That would be your order block up here. Your order block down here will be the last bearish one before the move up. So this move that we started coming down, once it turns red and then starts moving up, that would be the order block. Just look up order block, bro, on YouTube. Yeah, that too. You could do that too, bro. And there's an indicator right here too. You could type in the order block and you'll be able to find that too. Stuff like that. I think, was it that one? Oh yeah. But yeah, like I was saying, Lastic is that was the same idea, I believe. Um, like using the whole candle range idea is the same thing right here. It's like it's this same idea here. Close below, look, close below here, and then you're gonna target the previous lows. Previous lows looks like this guy. So you're gonna move this guy here, boom. Let's see. Nope, that wasn't it. Nope, that wasn't it. No, that wasn't it. That wasn't it. But yeah, bro, like I said, it's the same thing over these. All these candles pretty much does the same thing. Just finding the ones that do it. And every candle's a range, so pretty much it's all just a range. It's the last bearish candle of the bullish expansion and the last bullish candle before the bearish expansion. Yes, that's exactly it. That's exactly it. But yeah, so Lastic, look, so kind of the same idea of all of that happening, right? So look, this ends up becoming the idea that we had, which was the break of this low right here. Pretty much that was the wick below to target the highs of this range. So if this was the range right here, then this goes back into the idea that this is the top of the range. And this is what we always say is that what I've learned is that it goes from pretty much turtle soup into turtle soup, and then every exit is an entry and every entry is an exit. So pretty much what that means is that if you get in at the right position, let's say you're taking a buy, the perfect buy is also the perfect exit on the sell. So pretty much vice versa. If you're taking the buy, now the perfect exit on your buy is going to be where we take a sell and it reverses that. So that's where I'm saying is when you understand I just wanted to see if you do it differently than the YouTube videos I've watched. I'm still wet behind the ears, bro, absorbing as much knowledge and experience as possible like you. Oh, for sure, James, don't worry about it. Like I said, man, just make sure you show up every single day and, you know, put it in the time on the charts and you'll be good, bro. Don't worry about it. Don't worry, bro. You hear it now. It'll make sense later. Yep. Yeah, so exactly. Okay, so like I was saying, okay, look, this was the bottom of the range. This was the move to go back up to the top of the range, which is right here. And then it does the same thing. So now what I think could have possibly happened is you could kind of see on this area right here, this ends up being the candle range right here now. And as you could see, this one wicked above and then it closed back inside of this range of this candle. So it closed back inside of it. So what that usually means though is that they say you could target, you have two targets. You have the 50% level of this big candle, which is right here, the 50% of this big candle, and then you also have the 100% of the candle, which is at the bottom of it. So you got pretty much two targets you could really shoot for. But this is where we're going to try to figure out is that are we going to come all the way down here to go back up, or are we going to come all the way back down here to do the same thing again? So if this is the target though, then we need to target a previous low. So let me see, a previous low would be down to here. The previous low will be down here. So if we do end up turning back around, then this ends up becoming the range right here. But then we need to target the previous low the same way we targeted this low. Then we might need to come back down here. But that's the whole idea, is just trying to figure out what range we're in and where we're heading and things like that. So pretty much, let me see. So look, this is kind of how I got this. This is how I got to this idea too. Same, bro. When I first went to Jersey. Yeah, that's how it goes, man. That's how it goes. So look, this is how I found this target right here, all right? So this would be the high of this range. And then we target the previous highs of that range, which is here. You can say boom, there. We target the previous highs of that, which is right, you say right here. Yeah, that was it right there. So this was the highs we targeted. And then this is what I'm kind of seeing right here, is that we did this. We closed above, we targeted the highs, and we closed back inside of this range. So now we probably need to come back down to the bottom of this range, which is all the way down here, which is, if you kind of look, we did tap this high already. I mean, we did tap it already. So if this was the range that I was talking about, this was the high of the range, this is the low of the range because of this candle. That's what we did right here with this bottom wick. So we tapped the bottom wick, and then we came back to the top of the range, which is up here. And now we got rejected from there. Now it's looking like the next step is probably to come back down to here again. But yeah. All right, so I'm just trying to find an area. So if that was the high right here, hold on, let me see something. Close above, close above. There, that is it. All right, so we hit there, we hit there. So my idea would be, yeah, this is not gonna come. This is probably gonna come back down right here. My idea would be that it gets rejected from somewhere around here. Fluidity, what up, bro? Are you spying on my chart, bro? Haha. Let's see. Fluidity, bro. Whoa, whoa, whoa. That looks awfully familiar, bro. That looks real familiar. Let's see. Wow. What time frame are you on? You are on the 1 hour. Bro's on the 1 hour. I'm on the 1 hour. Bruh. That's just like my chart, bro. You got the same targets. That's crazy. That's crazy. That's what's up, bro. That's what's up. I like that. I like that. So look, this is where we're gonna get a reaction at. I believe we'll get a reaction somewhere right here. Oh, look, this is it right here. Look, this is the thing I was talking about. Closing below. Watch, look, I'm gonna find something right here. Boom. Previous high to that is going to be, previous high to that is, the high is 28.52. Oh yeah, this is it right here. Look, this is it right here. Boom. There it is. Close below, close above, wick above to come down. Now it's gonna come down here. Watch. It's gonna come down. This is only 2 pips, but that's just the reading that I have. The way that I read it. Look, there it goes. Boom. And then that's why I say though, the same thing happens on all time frames. So the same way I'm able to read it right here on this 1 minute chart, and if it goes down and it taps that, just imagine if this was like on an hourly chart. This range right here would be, you know, a lot bigger than just a few pips. This is only 2 pips, but it's just because it's on a 1 minute chart. But that's how I'm reading the chart pretty much. It's pretty much the same way. So I already kind of know that this is probably going to be like a fake out in a sense. So let's see. There it goes. If it just pushes, then that's good, but okay, there goes the fake out right there. So that's what we're talking about though, is yeah. So that's what I'm saying though, is that look at exactly to that level like we were talking about. It needed to come back down because this is the range right here. So now the next range below is down here. So if we come down, it's going to be down to this level right here. But that's where I say though, is that the candles become ranges, and then that's how you can find the target of exactly where things need to happen at. That's why I knew this level right here is where it's going to drop or it's going to do something at, because of what I'm doing, of like the way I find it and stuff. I could already tell, and like I said, I could already tell by the looks of this right here that this wasn't going to continue all the way up like how this other one did that we caught earlier. The one that we caught earlier that went 100 and 250 pips or something, that was the one that we were able to, we could tell. Oh, look at this thing actually turned around. Let's see. So it technically turned around, so who knows? It might have been enough. Let's see. It did wick below. It needed to close below. But no, it needs to come down. That's just a wick above. Yeah, that was just a wick above, because it needs to come down at this level down here. Before it goes anywhere, I think it needs to come down here. Wick above, wick below. All right, let's see. And this is, if this ends up closing, this is gonna close back inside of this range. So that means it needs to come down and close, and then the next one's gonna create a top wick, and then maybe that one after will come down like that. Okay, there you go. Let's see. All right, let's see. Okay. Oh, damn. Look at, now I kind of just seen this. Close below. Previous high, previous lows. Yeah, what I'm seeing is, look, there goes the high right there that needed to be broken, I think. Well, actually, yeah, it already did get broken. So let's see how this closes. How this closes is gonna be important. And I appreciate you guys for watching. If you guys haven't hit that like button, make sure you guys hit that like button. But yeah, we got 17 people watching. 17 people watching, and we only got 5 likes. So make sure you guys hit that like button. Hit that like button for me. We got 17 people watching. I appreciate it. Let's get 15 likes. Let's get 15 likes. Smash that like button and subscribe, y'all. 18. Yeah, exactly. All right, so here comes that close. Let's see how this closes. Is it gonna close back inside this range, or retail sales data is less compared to previous years? GJ might join. Oh yeah, join the Discord too. If you guys are not joined the Discord, we have a Discord in our description of the video, and also my Instagram. So make sure you guys follow our Instagram, and also the Discord that's inside of the description. Don't forget that. Yeah, and also too, yeah, if you guys haven't followed this channel yet, make sure you guys go follow this channel, Downvote Clips. There's a lot of good videos on there. There's a lot of funny videos, a lot of everything, a lot of good stuff you can learn from, a lot of good videos to learn, tons of videos to learn from. That's the thing. How to handle losses, 3 stages of the market, all kinds of stuff, man. You guys go, if you guys are into learning, make sure you guys are following this page right here. There's a lot of good stuff right here. And go to playlists, because playlists will have a lot of, like, it's sectioned out for you, so you could kind of zoom through stuff. But yeah, I appreciate you guys for watching though. Appreciate it. Here we go. Let's go. Let's hit this bottom. Let's hit this bottom level like we were talking about. I needed to hit that. And this is where the area we're going to have a reaction. So my idea though is that if we end up closing below here, then this could also be a level 1, and then this will be level 2. So we might need to tap level 2, and then this is where we'll have our next reaction at. Let's see. I appreciate you guys for liking though. I appreciate you guys for liking. When Dawn's streaming again. Dawn doesn't stream until the week is up. Because if you guys look right here, it says he got a strike, and he said is done for a week. So I think it happened, which was today. So today was day 1. So, or today was day 2. One of those. I forgot what it was, but yeah. Yeah, I posted this a day ago. So this was yesterday. So I think today was the second day. So he has a week. But this was the cool thing about that though, is that since he's not going to be streaming for the next week, I'm probably going to be streaming for the next 2 days when I'm off of work. That's going to be my next thing I'm going to do, is I'm going to hopefully start streaming. I'm going to stream New York. Yeah, I seen James went to Kick. I seen that. He's also still on YouTube, I believe, but Kick and YouTube. I was like, "Duh, that's dope right there." I might try to do that too. I might try to go to an event. And look at this right here. Hey, Elastic, check this out. This does the same idea. Look, this is the range of the candle, right? This one wick below, and then it closed inside of this range of this candle. So what that usually signals though is now we need to either fill in this whole range, or the 50% of this range. So a lot of times is we're going to at least go up to this 50 mark. So what could be going on right now? We could be possibly looking for buys. Hold on, let me see. Way up here. So that's the 50 line. So that's where we'll be having probably a pullback or something like that. But that's only 10. That's only 14 pips away. That's nothing to be even trying to. These ranges are so small right now. It's like I wouldn't even be playing with these ranges right now. So it might, like I said, it still might need, because we are ranging so hard. Like for the last, looking for the last 5 hours, the last 12 hours actually. If you think about it, for the last 12 hours, we just been ranging right here. So even if we do go up to the top, it's just to probably come back down to here, something like that. So I would stay out of this range right now. I would definitely stay out of it. But yeah, I appreciate you guys though for watching. I appreciate it. Hey, give me 1 second, y'all. Give me 1 second. I'll be right back. Yo. Let's see. Uh-oh. Here we go. Faking it out. Fake out. Boom. Hey, this is a good example right here. Obviously, this is just a small little range right here, but this is a good example right here. Like the whole idea of what the whole candle range theory is and what it is about. If you guys are new to the channel and you guys are there it goes, boom. So look, this is the same idea. Okay, look, there's a range right here. We wick above, close back inside of the range of the candle, right? So since we touched the top of the range, we need to touch the bottom of the range. And if you notice, this is the one that did that. So what usually happens is when we touch the bottom of the range right here, the trick is to target the previous low now. So as you can see, this is the previous low right here. So as you can see, this is the low, boom, right there. That's the previous low. We targeted that low. We sweeped it. And then after we sweep that, look at what ended up happening. We ended up closing back inside of this candle as this the range now. So after we swept the lows, boom, that would have been where you would have wanted to take your buys at. So what I've been kind of learning and just kind of understanding is that if I wanted to take a buy, I'm not taking no buy up here. I'm taking the buy down here because I understand I'm not taking nothing that's going in the direction of the buy, as in like this. I'm taking a buy as it's coming down to go back up. So as this is what I'm saying is that this was the ending of this candle range theory idea. It wicked below here and then it closed inside of this range of this candle. And this is where I was saying though, is that once it closed inside of this candle right here, once it closed inside, it needed to touch the top of the range. Boom, touch the top of the range, right? Do the same thing. We close above this range right here. We target the previous high, which is right here. And then we did the same thing. And you go to a smaller time frame. Look, that's the smaller time frame right there. That's the close above, wick above, and now we targeting the previous range low. As you can see, this is all green, 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 and green. So all these candles being in green, that means this is the whole range right here. So that range is pretty much all of this down here. So what needs to happen is we need to target the low of the range, and that's was pretty much that right there. And if I go to a 1 minute, the previous low is actually down here. So when we're looking for a trade, you're not taking a trade right here to come down. Where you're going to be wanting a trade is on a pull back up like this, a break of a high, and then you're taking the sell down here like that. That's where I say that's how you follow a plan. That's how you follow your playbook and stuff like that. So that's just kind of, like I said, my idea. So it's like I'm not taking no, even though I would have wanted to obviously get into there. Obviously not now, it's kind of late, but and it's a small range. Like I said, I'm not trying to get into no trade right here because of how small this range is. It's just like it's too risky right here. And if you kind of look at what ended up happening, it did the same exact thing right here. Look, candle range right here, candle range, wick above, close inside the range, target the low, boom, target the low. That's what we did. Rinse and repeat. Exactly. Rinse and repeat. Rinse and repeat. Exactly. And that's exactly all we're pretty much doing. And that's where I was saying though too, is like what I've been doing here on the smaller time frame, it does the same exact thing on the 4 hour. It just obviously takes longer. So I'm getting better at understanding this also on the 4 hour, and then even going up to the daily, understanding the daily one. I'm even trying to get to the point to where I find out the weekly one, the everything pretty much. I find out the weekly one, I find out the monthly one, all that stuff. So if you kind of look at it right here though, this is one thing that I see on the monthly. It did the same exact thing that I talk about the candles. Look, a candle range right here. This candle right here wicked above, and then it closed back inside of the range. So since we've already touched the top of the range, does that mean we need to touch the bottom of this range? And this candle right here is flipping bearish. So if this ends up flipping bearish, then there's always a chance that we could possibly continue back bearish. And then this would be the range. But like how I say, we usually touch the 50% of the range at least. And that's exactly where we're getting stuck at, which is right here at this 50% line. So that's pretty much where we're getting stuck at. So that's why I'm saying that's why that 50 line is important, because of that. It's like that's where we're getting. So That's the range here, that's the range here. So I'm wondering though if we at least need to break these lows, which will give us some lower prices. But that's what I'm saying. Okay, so let me see the weekly. So where I would find that though is like these are all like I gotta find the target. So the target would be somewhere down here. So if that's the target, but I'm wondering if it needs to come up first. Well, no, I already did. Let's see the daily. Let's go to the daily. Daily, same thing. This candle becomes the range right here, but this one technically didn't touch the bottom of it yet. Let's see. Yo, Alexander, what up? What up? So yeah, so this is on the 4 hour. So yeah, so like I said, this is the range that we're kind of in right now, which is this candle on the 4 hour. So what I'm kind of seeing though is that we did already close above, break above, do everything that we needed to do for the reversal. So if this ends up becoming the reversal right here, then every single trade that we end up taking, at least to the halfway mark, is all going to be trades after we take a pullback to come down. I mean, it could be wrong, but the way it's looking is that let's see. All right, and let's see. Close below, lower prices. We already created lower prices. Let's see right here. And it did wick above exactly like I was expecting, and it needed to come down. So the previous range would be down here. So it definitely needs to come down. And did that close back? No, that didn't. That closed below. So that means we need to create lower prices. So if this creates lower prices, then that means from here, we're going to target the previous lows, which would also be pretty much here. Wait, let's see, hold on. Close below, lower prices. Close below, lower prices. Close below, lower prices. So the lower prices would be over here. And we tap that, and like boom, right there, got the reverse, boom. But that's not what we're looking for. So that tap, that did that, that did that. If you look at the 4 hour in the triangle, yeah, hold on, give me 1 second. All right, so yeah, that's the low of there. So we closed that, did that. I'm wondering, look, there's a fair value gap right here. Did we just get rejected from that? Boom, right there. If you look at the 4 hour, that is a triangle. Yeah. All right, so Lower prices, we already did that. So, no, but that actually isn't it. So, all right. So I think we're gonna have to come down here. I think we come down here. I think. Let's see. Let's see. Where's the fair value gaps at? Okay, look, there's a fair value gap right here, and I'm wondering if this is where we're gonna get rejected at. I wonder if we get rejected at this level right here. Triangular, so buy or sell. Buy or sell, buddy. That's what I'm saying, because I'm thinking we still need to tap this lower area down here. So if that's the case, then that's where I'm thinking this could be that sell area. And you know what? Earlier I was saying that that would have been the... Yeah, it's going down. It's going to go down. Because I was saying it needed to come up here, I believe, and it needed to break these highs. I wanted to say this candle. That was it. I think this was it. This was gonna come down. Damn. Let's see. Let's see what happens. Close above, higher prices. There it goes. There it goes. I wonder if that was it then. Because that was the, that was everything. With below lower prices. It's probably gonna break these highs and then come back down. I think it's gonna come back down after breaking these highs. I guess not. Oh, then like look at it goes back to kind of what we were saying about this one though. This is the range right here. It did everything it was probably supposed to do already. That was it then. There it goes. Oops. Damn, that thing's going. But yeah. Alright guys, I'm gonna need to get off because it's already kind of late for me. I gotta get up for work tomorrow and stuff, so but yeah, so I appreciate you guys for watching though. If you guys wouldn't mind hitting that like and subscribe, hit that like and subscribe. I would really appreciate it. But yeah, appreciate you guys for watching though. I'll be on tomorrow again. Tomorrow I'll be on longer because I won't have to work the next day, so make sure you guys come tomorrow for tomorrow's stream too. And then I'm probably gonna stream New York for the next 2 days following tomorrow, not tomorrow but the days after. So I think Thursday, Friday I'll try to stream New York, so make sure you guys are showing up. Appreciate you guys for watching though. I'll see you guys later. Peace. Yeah, no worries, James. Always, bro. Appreciate you for showing up, bro. I'm gonna make you into a great trader, James. I'm gonna teach you all my stuff. And if you got me on Instagram, James, follow me on Instagram. Send me a message. I could send you some stuff that could maybe help you out. But yeah, I appreciate it.